All right. I guess we'll just start off with some intros. I'll start. So I'm Teck. I work at Binance X, this new initiative that is developer focused. It's 4 months old. We run a scholarship program to give grants to open source developers. We have about 50 projects in the program so far. We help developers onboard to the Binance suite of products and services. And we refer projects to internal teams at Binance to help them grow and support them in other ways. So that's Binance X.
Hi, my name is Dong Song. I'm the founder and CEO here at Oasis Labs, and also a professor in computer science at UC Berkeley. And it's really been great having working together with such a brilliant team here. And yeah, thanks.
My name is Jesse. I'm the founder of Bloom. Bloom builds a decentralized identity product. We have a mobile app. We just passed 1 million installs. And we have about 40 apps that have integrated it, And we're super focused on privacy, selective sharing, being able to verify yourself without sharing your raw information. And a lot of what we do is around expanding those developer toolkits and making it friendly so people can continue to expand this ecosystem.
Hi everyone, my name is Wearn. I'm co-founder, CEO of IDEX. We are a hybrid decentralized exchange on Ethereum, one of the most successful dApps. The hybrid part refers to our balance of on-chain smart contract custody and off-chain order books and execution. So we've got some perspective on usability within kind of the DeFi and smart contract space, and it's also some perspective on privacy that we're excited to share.
Hi, I'm Nevin from Reserve. Reserve is a decentralized stablecoin, and at the moment we're in the midst of making it available to people in Venezuela with an Android app. So you can buy it with Venezuelan bolivars and sell it for Venezuelan bolivars through this application. That's the thing we're focused on right now.
Hello, I'm Adelyn Zhuo. I'm the Chief Marketing Officer at Chainlink. Chainlink is a decentralized Oracle network. What we do is connect smart contracts that are on the blockchain with data that's off the blockchain. So everything from insurance data, your crypto pricing data, all that data isn't inherently on the blockchain itself. And so we provide a secure, reliable, end-to-end trusted solution in a decentralized Oracle format to connect that data for your smart contracts.
Hi everyone, I'm Taylor Monahan. I am the founder and CEO of MyCrypto. MyCrypto is a wallet interface thing that allows you to interact with the Ethereum blockchain. We don't hold your keys. You can use like your Ledger, your Trezor, or MetaMask, or your raw keys themselves. If you're not familiar with us, you're probably familiar with my Ether wallet. I was the founder over there before. Now it's MyCrypto. So yeah, I've been just dealing with users for so long, and I'm really excited to have a conversation about privacy because, especially with the recent news regarding Libra and China, I think it's going to be increasingly important that we have this conversation.
All right. So DeFi has kind of grown and evolved so far without any privacy feature. How will privacy help, or how will privacy help DeFi? How would the additional privacy help DeFi?
Okay. I can start with just one simple example. So today, when we look at DeFi, for example, for lending and so on, we continue to see that everything is collateralized. But this, of course, is while it's a growing market, but in general, if we look at the greater financial landscape, this is only a very small part. So if we want to actually grow this open finance to bigger adoption, essentially we need to get out of this over-collateralized regime. And in order to do that, essentially we need to get into the area of credits, having credit scores, so that when you lend, you know you actually have a pretty good model whether the person is going to actually return the money and so on. So then when we get into that regime, essentially privacy becomes really important. When you want to assess someone's credit score, requires access to a lot of sensitive information to make a correct, a good call on that. And so this is where why you actually need privacy. And that's also why, like in most financial services, privacy is really important because you need to make decisions based on really sensitive information. And that's also where we hope that the technologies that we have been developing at Oasis Labs can really help.
How will privacy help DeFi? I think DeFi will help the rest of the world. There's 10,000 to 15,000 companies that pool and sell your personal information. The obvious ones are the credit bureaus, which mine it, buy it from financial service providers, and then leak it. That shouldn't happen. Around the world, this is increasing. The number of companies that are pooling and selling your data is increasing at an unprecedented rate. Your entire financial history is being sold. And so it shouldn't be public, but it is public. You can find anyone's credit score online. You can find anyone's social security number online. There are data breach directories that make this stuff public. And so I think if we introduce a world where crypto principles, selective sharing, privacy become the norm, that DeFi will help the rest of the world. So privacy, I think, is critical for not just DeFi, but for changing the way we store data and share data globally.
Yeah, totally agree. So maybe from a trading perspective, and I think it was kind of mentioned in the intro slides, if you're trading, you're trying to do it for financial gain, and you think you have an edge on the market. And if that information about your position and your strategy is public, that can be problematic. Interestingly, this was actually a concern early days of Bitcoin, but the pseudonymity combined somewhat, maybe ironically, with centralized exchanges, which serve as a privacy layer from everybody else seeing your trades, in some ways helped it become adopted as a financial instrument. You still have things like the whale bots on Twitter that track large deposits and withdrawals that may give some insights into people's movements, but by and large, it's not public. But as Jesse just said, it is in the hands of one entity that you then have to trust with that information. And maybe an example of kind of DeFi, for the most part, I think the pseudonymity has made it not too problematic early on. But there was actually an issue a few weeks ago where a token showed up in the wallet that owns the maker that A16Z purchased, which then set off this speculative frenzy on Twitter of did they just invest? It then got tagged as the A16Z wallet like a few hours later on Etherscan. They may have wanted to disclose that investment in the future, but probably not through that method. So it kind of just brings to the forefront some of the challenges of these pseudonymous addresses and how it links back to potential real-world participants.
An acquaintance of mine told a story where their company paid their employees in stable coins. And then the employees all figured out how much each other were being paid. And I really love that example because it's so mundane and it's so sort of, it's like it reminds you of like how for granted you take it, that like your paycheck isn't visible to your coworkers or your company sort of treasury isn't visible to your competitor, etc. And then it's like, building a decentralized stablecoin. The general topic is like, making sure that the other governments that are bad can't, like, see the thing and take it away from you, blah, blah, blah. But it's like, if we're going to do this in practice, if there's going to be, like, accounting, like, software and payroll software, and everyone's, like, using this in economies, which is what we are aiming for, there's just this, like, simple practical need for privacy. And so, there's a question of, well, how do we do that without, causing the thing that is every regulator's nightmare with, like, full privacy and so on and so forth. I'm not sure the exact answer yet. We're working on that, but I think that sort of that it's really important to keep in mind kind of the basic mundane reasons why privacy is actually quite important to a lot of basic financial transactions.
Absolutely. And jumping on actually what Don was saying earlier about knowing credit scores and information, one thing as an Oracle system, what we're working on is actually bringing that credit score information that's in the real world into smart contracts. So the smart contract might want to have that credit score or that personal information and obscure it, but needs that information before they can give you your loan or your DeFi product. And so we are creating ways to connect that external data and bring it into a smart contract. We also announced a project called Mixicles. It was in conjunction with IC3 and professors at Cornell. And what that is it adds privacy onto a public blockchain. So you now can use a system in the Oracle to take information, and then using the Mixicle, you can obscure who gets what kind of payout. And so in a way, you can add this additional layer of privacy into like any public chain, for example, Oasis or Reserve or something like that, to help give you that additional privacy we need.
Yeah, I love the paycheck example actually, because so my team and I, we had a very late night conversation about mixers, right? And how do we have, just like, thought experiment, right? How do you have a mixer that doesn't like immediately get shut down? And the way that we kind of like went around thinking about this is we ended up with like a 2x2, right? And you have like the high risk and the low risk, right? And a paycheck, like you're paid, your teammates finding out how much you get paid, it's not the end of the world. It's uncomfortable, but it's not the end of the world, right? But on the other end of the spectrum, on the high risk, right? Like repressive regimes, right? Governments, like evil people, finding out things and where you are and who you are and what you're doing and who you're interacting with. Like, you have the entire spectrum of stuff. And then the other sort of like other 2x2, or what forms the square, right, is sort of like legitimate and illegitimate use cases. And that's the reason that the paycheck is actually really a good example, because it's low risk and it's legitimate, right? But most of the times when we talk about mixers, we talk about privacy, we talk about illegitimate things, right? So you talk about like the child porn and the nukes and, all of the really bad things that we really don't want to talk about. And so you have this square, and the sort of conclusion that we came to was like, the low risk, legitimate use cases are important to protect. And the high risk, legitimate use cases are important to protect. And then the real conversation was, well, how comfortable are we knowing that if we were to like, thought experiment, do a mixer, right? How comfortable are we with the idea that like we may be protecting these people, but that's also the child porn, the nukes, the evil countries, the things that we don't want to protect, right? Like we spend a lot of time fighting phishers and scammers and hackers, but that would probably protect them as well. And so it's a really hard conversation to have, but I think it's one that we should be having, right? Because it will do amazing things for people, and it's a necessary thing, but there is this like darker side to it. And we can't let the dark side win, right? We can't let that not protect people's privacy, but we have to find sort of a balance in what we're comfortable with, and especially when you bring in like decentralization, centralization, or a hybrid solution, I mean, you could go all night, right? So I'll leave it at that.
Yeah, I think speaking of privacy for credit scores, especially like every one of you who has a credit card, your private information PI is already out there through the Equifax tag. I think the default password is like admin for the database. So moving on. So most of the DeFi applications have been built on Ethereum. This might be a rhetorical question. Do you think that so DeFi application could move on to or like expand to other chains, and could privacy be the trigger, or other things could be the trigger? What's your thoughts?
I guess, like you said, it's a rhetorical question. As I mentioned earlier, right? So today, even though in DeFi we are seeing growth, but however, the goal is really to grow much beyond that. Essentially, to provide the capabilities and the kind of services that's not available today. As the example that I mentioned in this over-collateralized regime. So that's why on Oasis, as we talk about DeFi, or talk about open finance, we hope that the privacy capability can really open up the doors to enable these new services and capabilities that couldn't be done on the public, on the network like Ethereum, where there's no privacy protection. So that we can actually open up the services to a much broader audience and population.
I think introducing a blockchain makes a lot of the DeFi things a little confusing. You can have a lot of privacy and a lot of DeFi, protocols and systems without actually needing a blockchain itself. If you think about like traditional credit scores, if you move to a new country, your credit score resets. And similarly, we shouldn't have that same problem with blockchains. Like if you move to a new blockchain, your credit history shouldn't reset. It's kind of like replacing one problem with another. And so I think a lot of DeFi's advancement is going to come from moving away from on-chain and onto user-controlled data, which is going to be Merkle proofs, selective sharing, zero-knowledge proofs, where users can store the data locally, share it when they need to, and put it on-chain if it's necessary, but it's probably not necessary to have a lot of things on-chain, in my opinion. Some things will, of course, be necessary, but like identity data or credit scores, I don't think they'll necessarily need to be on-chain.
Yeah, so I guess my thoughts on this, I think that in general, blockchains are going to follow kind of a power law, just because they're networks, and networks typically follow a power law distribution. That said, to think that the ETH Foundation got everything right with the current version of ETH, and that their upgrade path is perfect and going to go off without a hitch, I think that's also kind of naive, and so there's opportunity for others to innovate. Question for me then becomes, can existing blockchains that have dominance incorporate those innovations faster than they lose market share to the incumbents or the newcomers? I actually, early on, I thought, if people remember the flippening, it was this idea that ETH was going to surpass Bitcoin in market cap, and it didn't happen, and I think you've seen Bitcoin kind of solidify its use case, or starting to crystallize around this non-sovereign, independent, fixed supply money currency. It doesn't look like they're going to upgrade it to smart contracts anytime soon, if ever. So now, if we prove that smart contracts are useful, Ethereum has a clear niche there. And I think there's certainly opportunity for others to do the same thing.
Yeah, I think that right now I think a lot of people are sort of grasping at anything, right? Because we are in the heart of the bear market, if you guys didn't know. And it's hard to look around and say, this is it. Like, this is, like, we've got it. We found product market fit. We're confident. We know who our users are and why they're using our product and where we need to go from here. And I think that Bitcoin has succeeded in basically choosing, right? They basically made a choice to be just store of value, essentially, right? And Ethereum has always been like the sort of like the not Bitcoin, right? Like it's been the smart contracts, it's been the dApps, it's been the DeFi, it's been all these things. But at the end of the day, it really is just like it's not Bitcoin. It's not a store of value, even though it is. So I think that over probably the next couple of years, we will see other chains come up. We will see probably like 3 or 4 main coins that have very different or primary use cases be solidified. I'm not gonna like guess because it's a crapshoot, right? But I do think that because of where the technology and the innovation is today, we will see a lot of things sort of jumping around, and then everyone will sort of find that use case, just like Bitcoin found its sort of use case, and everyone's in agreement. And that's when I think the value will sort of hockey stick up, right? Once people actually know what they're here for.
And I just have one more thing. We talk about, if you say it's something else other than Ethereum, we know China is a totally different market, and with Xi Jinping's recent comments, they probably want their own sort of chain, and probably not a public chain, maybe a consortium chain or a private chain or something like that. So if we are looking at from a global perspective, I think there's a lot of opportunity for other chains.
All right. So composability is becoming, important and a big thing in the smart contracts, field or arena, and especially in DeFi, where the contracts that depend on other contracts and are composed of different kinds of contracts. So if something goes wrong in DeFi contract, where does responsibility and liability go within a stack? Get your perspective on that.
Obviously, there's a lot of responsibility when you're dealing with smart contracts, and anything can go wrong and anything can get hacked. I think it's critical to use the smart contracts for only the core, most sensitive thing that the user needs to control. On Bloom's mobile app, we just passed 1 million installs. And one of the reasons we were able to do that is because most of it is not smart contract based. Obviously, the identity elements are smart contract based. There is an Ethereum wallet that's generated for each of those 1 million users. But the onboarding flow is not smart contract based. The user experience is not smart contract based. How you actually verify your identity is not smart contract based. Only the actual identity proofs and the kind of the core information is smart contract based. So I think in terms of actually putting these things together and eliminating risks, I think people think that the whole stack needs to be decentralized. And in my view, and in Bloom's view, we always look at minimum viable decentralization. Like, what's the smallest thing that we can decentralize so that it still is portable across applications and services, so that it still can't get hacked, etc. So I think just a lot of security and compostability comes down to what's the minimally viable thing that we can decentralize. I know you guys do that too a lot.
Yeah, so I love that phrase, minimum viable decentralization, and maybe I can talk about it in IDEX terms a little bit later. I think to the whose fault is it question, I don't know, right? It's like, it'd be a total mess. Hope it doesn't happen, seems unlikely seems likely it will happen at some point in some way. I can say we actually audit token contracts that we list on IDEX, because we had a few, the creativity people show in copying what should be a standard, it's shocking. And so we had people replicating bugs that should never have been introduced in the first place because they broke from the standard. So we actually now have to review and look for those because we feel, even though we have disclaimers everywhere, we feel liable for the products that we're showing to customers on the site. So, and in a move fast and break things kind of startup culture, like, it seems likely something's going to get overlooked. And yeah, we'll see.
The securities laws kind of exist to stop people from accidentally screwing themselves in some way, right? And I think something we saw with ICO investing was a lot of people learning a bunch of lessons very fast about how to tell when things are scams. And the market didn't totally figure it out. At this point, it's kind of like the assumptions that everything's a scam, and then that, like with everyone kind of saying that kind of works, you dig deeper and you eventually find things that are not scams. So it's like, in a sense, the fact that the market kind of ignored the securities laws caused all of the consumers to become much smarter and actually figure out, almost as a kind of a weird, like meme-based hive mind, like how to figure out which things are scams and going to screw you over. And if it's the case that there ends up being a bunch of problems, like as we build a whole bunch of different things in smart contracts and things start to fall apart and a bunch of people start to have bad experiences, I would guess that you'd get a similar effect where it's like, okay, the world eventually learns, like, okay, this is just code. Okay, there is no one I can call who's going to get my money back, and so on and so forth. Where it's like, of course, people are not going to understand that today. But if that happens frequently enough, then I would imagine this is not an answer to who's liable. It's like, well, it's code, right? So the whole point is, in a sense, that no one's liable. If it happens enough, then perhaps people will end up learning. It could be that it's not as frequent as like ICOs, sort of going kaput, and so maybe it'll just be a few people who lose their money. But that's kind of my thought on it.
Yeah, people they really like to shoot themselves in the foot. And we saw it with users during ICOs. And I don't mean like just people thinking that they could invest in ICOs because they watched everyone else make money. Like, you got a second mortgage, right? All of those decisions, partially they do lie on the user, but they also lie on the ICO who, or the project or whatever it is that marketed it in that way, and put the little risk disclaimers about this big at the very bottom, or didn't even include them at all. It's also on, it's everyone in those projects, it's everyone promoting them, it's everyone gaining from them. And so one thing that I hope, especially in these early days where we do have the ability to do this, is that we should hold each other all accountable. We should work hard to educate users, and we shouldn't blame people necessarily, but we should spread the blame and the accountability around so that hopefully as everyone is in this space, whether you're a builder, whether you're a founder, whether you're a user, it doesn't matter. You're kind of just always aware of where are the risks, how can we educate each other about them, and hopefully that will result in maybe just a little bit less money being lost the next time around.
And also, so this type of questions actually is not really unique in the crypto world. I remember even early on, for example, when Microsoft Windows has lots of vulnerabilities, people keep asking whether Microsoft should be liable for introducing all these vulnerabilities in their, having vulnerabilities in their systems and causing everybody else to lose a lot of money. But that never came to anything. I think in general, as we all know, like code, unfortunately, it's difficult to really write cracked code and writing secure code, and it's something that forever that the community will be working to battle with. And with that said, I think that's also why it's really important to develop the technologies and tools to help improve the security of code and to ensure the correctness of code and so on. And of course, given it's a decentralized world, then there's the question gets even harder: is who writes, who should be held accountable for? But as I said, given that even in the non-crypto world, it's difficult to hold anyone accountable for the vulnerabilities that they have in their code, and hence we need to have other solutions, have better technologies to help ensure the security and correctness of code.
Since we're talking about composability, you had that stack. I think Luca had a stack of like all these different projects, these wallets, these oracles that we're showing. I think part of it is if you are an application builder and building a DeFi project, you will go and look at which player in the stack has the best track record. Who has the best security, who's gone through the most audits, who has done this for years and who hasn't had any vulnerabilities. Because at the end of the day, right, as a user, like we're gonna first go to the DeFi app, the dApp, to like protest. Even if it might not be their issue, if it's the wallet that they choose, or if their layer 2 scaling solution they choose, or whatever, they're still going to be the first point of consumer contact because they're the B2C layer. So I would say over time, the best composability stack applications that these dApps are building on top of, they are going to be the ones that are all going to be racing to build the best and most secure system.
For those code is law maximalists out there, there's no such thing as a bug in smart contracts, right? Everything you can do in a smart contract is by definition correct. So that's a very classic people here. No?
Does anyone actually think code is law? Okay.
No one believes that? All right.
We got rid of them all.
So let's hone in on a particular DeFi application. The oldest one I can think of, maybe there's older ones out there, MakerDAO. So they're moving to a multi-collateral regime. What are you? What's that?
No.
It's a good word choice.
Yeah, Lafayette regime.
Regime? Oh, I borrowed from Tom here. So, any thoughts on that, and what are the effects on moving to that multi-collateral scheme?
I mean, they're really pushing to expand multi-collateral even into traditional real-world assets, which they have a word for. I forget what they call it, but so I think I hope we see a blending of I like multi-collateral DAI, and I hope DeFi continues to expand and blend with the real world, and I think that's going to be a great way that DeFi will continue to get real world adoption. So I mean, I'm all in favor of it, and I don't really see much of the controversy around it, although I know there is a lot.
Maybe just one thought on the real-world assets. There's a school of thought which I kind of agree with around the idea that it's interesting if it's self-contained and use blockchain-based assets to be the collateral. It's some people's argument that Bitcoin is the most interesting blockchain because it's a self-contained protocol and it doesn't need outside information. I don't fully agree with that, but I can see the similar argument for a stablecoin, that backing it with only the collateral on-chain makes it more censorship resistant, and once you start to link it to the real world, it can create challenges. I also tend to think that if we stay in our little crypto bubble and keep everything crypto focused, we're really going to have trouble scaling beyond kind of the group of adopters that are interested today. But it certainly brings up a host of regulatory questions when you start to link it to off-chain assets.
Where to start? Okay. First off, including collateral assets that are linked to the real world, if you have a bunch of them, I think doesn't really hurt censorship resistance that much. As long as the CDP creators know that there's going to be some problem with their like collateralized thing, they can take it out and go redeem it before it gets shut down. This is similar in our protocol. The problem with Maker, from our perspective, my team has written a huge post about this. It takes 45 minutes to read. I will not get into it now, but go check it out on reserve.org if you want. It describes Maker better than most things on the internet. The problem with Maker is that there's a problem scaling the number of stablecoins, because it depends on people's demand to put assets in CDPs. And so adding more collateral assets helps with that. And actually in the limit, we think that maybe the sort of optimal asset is like if you can put like treasury bills in a CDP, then if you have the interest rate go down to 0%, people want to put like infinite treasury bills in and get leverage on like a risk-free asset. The problem is that when you do this, you have a hard time keeping the peg, because people then want to put in infinite. So it's hard. You want to like get to like the exact right demand for putting in assets. You don't want to have not enough. You don't want to have infinite. And so the thing that we get to watch play out with multi-collateral DAI is, can they figure out a set of assets where people want to put in the right amount, so that you get the right amount of DAI, so that the peg to roughly $1 is actually held with DAI. I believe that's going to be sort of the core technical, at least from an economic perspective, challenge for Maker, and I'm excited to see how they figure it out.
Yeah, I think that, sort of zooming out a little bit, what I've been like thinking about a lot lately is this sort of whole decentralization concept in general, right? Like what does decentralization mean? How realistically, like how much decentralization does any given product or service or system need? And the answer is not universal, right? The answer is, when you look at any given system, what is the value of that system? What are you fighting against? What are you trying to build? What is your goal, right? And if you look at those questions and you look at the answers, it'll be clear where the decentralization is to lie. Now, when we look at Maker, without the multi-collateral, right, just DAI in general, even if DAI itself is 100% sort of quote-unquote decentralized, the entire Ethereum ecosystem is now sort of relying on DAI. So even if it's decentralized, meaning that there's not a, a single power who can like turn off DAI, it's still a little bit scary in the sense that like if DAI were to collapse, the entire DeFi ecosystem would go right down with it, and Ethereum, because that's pretty much everything anyone's doing at this point, right? So when we're talking about decentralization, we always kind of look at like, like proving that no single like individual person can like lock down a contract or that has the keys or like whatever, right? But I think that we need to look at it in terms of risk, and we need to look at, okay, what are the risks? What are the external forces, the real world forces, the smart contract forces, right? Security issues, people issues, the game theory and the economics and all of these things. And if there's a single point of failure, or if a single point of failure, or even like maybe tightly coupled multiple points of failure, result in a great amount of loss across an entire ecosystem, I think that we should probably take a step back and see if we can reduce that risk in any way, shape, or form. And I'm hopeful for multi-collateral DAI, but I think that the added complexity on top of the risk that DAI has across the entire ecosystem, Ethereum ecosystem right now, like thank God we're not in a bull market, because it would, when it comes crashing down, it would come crashing down from great heights, and hopefully we've got some more time to figure it out before that happens.
I believe MakerDAO has a kill switch that's centrally controlled. Is that right, Nevin?
I wasn't going to mention that one.
Okay, so
because in theory, the thing is, though, I think most smart contracts have this, and I try not to bring it up simply because ideally they wouldn't have it. And if someone uses it for nefarious reasons, like that's a whole separate thing. I'd rather pretend that they don't exist, because I think that they should exist because the DAO. Like, I was there, and I wish the DAO had a fucking kill switch.
yeah, and let's hope DAOs work. Next question.
We talk about DAOs next.
No DAO questions. Right. So where do you see the future of DeFi in terms of adoption and evolution of features, and then what role does privacy play in that evolution in each of your areas? I think each of you has different roles to play in the DeFi world.
I really think that DeFi should expand beyond crypto. We've tried really hard to do that. We run a bunch of ads to see if your data has been breached and see if you're owed money from the Equifax settlement, and then we onboard users to our app, and they have no idea that they're even getting an Ethereum wallet issued to them. They have no idea that they're setting up a decentralized identity. Obviously, the advocates do. Obviously, to try to educate them. But we have gotten 1 million people to have a decentralized identity, which is portable. They own the keys to it. They're stored in a local device. And a few dozen apps integrate that, including a couple big companies. But we're building the user base without them even knowing that it's DeFi powered. And that's obviously our philosophy, and I think that trend will continue across DeFi apps. I don't see any reason why we must force people to use MetaMask. We must force people to be exactly aware that they're entering a crypto land. I think that's just a little bit restrictive. So to the extent that DeFi can open up to become mainstream, I think that will help it get more adoption.
What was the question again? It was like the
How does DeFi evolve? And
right. Okay, so there's a huge amount of like stablecoin lending, right? That's like kind of the core piece right now. So one thing that's like pretty clear is a bunch of stablecoin projects will integrate this into like consumer wallets, right? So they'll try to compete with like new banking sort of things by being like, look, you can get like way more return if you hold these stablecoins instead, or maybe you don't even call them stablecoins. So we'll see a bunch of that happening. And then there's a question of like, we were thinking, well, how long will those interest rates last? We actually think they're going to last a while. So we used to think, oh, these interest rates will go down and they'll match the normal market. We actually carefully thought it through, and we think that the interest rates now actually pretty closely encode the risk. So like we, as a project, decided not to put our millions of dollars of treasury into stablecoin lending, because actually if you look at the risk compared to the return, I think it doesn't make sense. And so actually, for like small consumer applications, putting money in stablecoins and getting that high return, that could actually last quite a while. So we could see that used as an adoption mechanism to try to get a bunch of normal people to put their money in stablecoins in some crypto wallet.
From our perspective in the Oracle space, we're excited about DeFi. It's one of the major use cases of bringing external data onto a blockchain, right? Your blockchain doesn't know what the price pair of ETH and USD is at any minute. And so we find that one of the major use cases of bringing external data. So we worked with major data providers, such as Binance, in pulling Binance API data directly into smart contracts using Chainlink oracles. So we're really excited about that because it now opens up the possibility of trading and doing smart contracts with live Binance data that for traders that might not have been able to do so before.
Yeah, as pessimistic as I am on like some of the very like the little things, right? Like the things that just terrify me when I wake up in the morning. In a broad perspective, like I'm really bullish on DeFi. I think that we're in like the sort of infrastructure phase still, but if you think about the possibilities that these sort of systems open up, and you think about it in a very global context, like just lending and borrowing, in theory, will sort of like help the whole pie grow. And one of the things I think is really problematic with crypto in general right now is that when you do have your funds in a wallet, they're just sitting there, and most of the time they're like really cold. And the reality is like ICOs were all about sort of like this capital allocation, right? Giving it to projects, and it was very efficient, but not necessarily very productive. Like you could very quickly give like $4 billion to a company that didn't have anything to show for anything, but like, what do they have to show today, right? So, I'm not naming anyone. So that's efficiency though, right? And that's capital allocation. And in theory, if you redistribute capital, tomorrow is going to be better than today, right? Like there's going to be more stuff. There's the ecosystem is going to grow, et cetera, et cetera, et cetera. But I think that ICOs were, yeah, they weren't the right mechanism, right? Like some people will be successful, and best case is like the 5 to 1% of companies that do survive and thrive and become huge will make up for the 95% that fall on their faces. That's best case. So I think that DeFi, and specifically like just starting with lending, right? But then you build on top of that. It has the ability to take capital that is just sitting there and locked up and useless, and do something with it in the meantime. And best case is, yeah, the pie grows huge. You know, we make mistakes, we learn from them, we grow from them, the whole ecosystem is stronger, projects are stronger, individuals are stronger, everyone's richer. Like, you know, these are the things that could happen. I think that we will see in the short term, as we go down different paths and experiments, there will be things that go wrong, just like we've seen in the last decade, right? I'm excited though, like I really, really am. And I'm hoping that people, at the very least, do try to attempt to learn from not the last decade of like just crypto failures, but like, I don't know, the history of the world and economics since forever. Because I mean, even in the last like 30 years, the US has done some pretty amazing things to destroy the economy. We could learn from that. And if you go back further in time, there's a lot of things that we could learn from. And if we get it right, or even if we get it like mostly right, the potential is really huge, especially when you combine it with the actual technology and the actual innovation that underlies it, and the fact that it's not a country, right? The fact that it's borderless and it's global, and in theory, anyone can access it. Like, that's exciting.
Yeah, I think as we already mentioned, so DeFi, well, it's a growing field, but really the goal is that we want to have greater adoption. And this, I think, also goes back to the theme of tonight, is that actually, I would say, I agree very much with what Taylor said. I think there's a huge potential, but one thing I think we all here all recognize, the one limiting factor, actually, it is privacy. So, I mean, of course, people talk about scalability today of the blockchain platforms is also a limiting factor. But I think in particular, actually, about DeFi, like scalability is not such a big issue. I would say that today, the limiting factor that's limiting DeFi from reaching out to a broader audience is actually the lack of privacy. Because of the lack of privacy, we can't provide capabilities to the things like I mentioned, to have under-collateralized loans and these other more sophisticated financial services and so on. So I think for blockchain, as we all know, like finance is one of the core applications for blockchain. Really, this removing intermediary and having greater efficiency and also the self-sovereignty of finance. All this has, we all hope that in the future it can really be accomplished on these goals. But I think it's really great that we are here to actually talk about privacy, because in order to achieve these goals, really privacy is the limiting factor.
I'd like to open up to the audience. Any questions from the audience? Go for it. Oh, yeah, just shout.
Yeah, so thank you for the amazing examples that I haven't heard before, the 2x2 square, which is really cool, and then the biggest probably branded VC firm in the world leaking their information about their investments. And the other one with the stable coins, I think I'm going to steal those definitely and repeat them. But when we think about like privacy and finance, if some of the biggest brands who've got probably billions invested in crypto, and then others that are running a crypto business, paying their employees in a stable coin, if they can't get private transactions right by design, how is like your regular user going to do that? And so with that like preface, what projects and what protocols do you think are helping make privacy by design like workable, so the user doesn't have to overthink it? Because the companies we're supposed to be leaders in the space, they're not getting it right. So, what do you think? What interesting projects like mixers and stuff like that do you see are out there, and what are the interesting initiatives that you find are going to try and like solve that problem? Because I don't think users are going to be able to solve it themselves. So thank you for the examples. I'm definitely
Well, I'll start off by just saying that. Okay. I'll start off by just saying, like, the reason that people haven't got it right is it's just not there yet, right? So it's not like there's some project that enables privacy and like where people are just like ignorant and not using it. It's like, and I'm sorry, specifically I'm talking about Ethereum because that's where I live. Obviously there are like Zcash, Monero have both been doing a lot of work on this. But specifically on Ethereum, privacy, like there isn't, there just isn't one, right? So the reason that we haven't seen, we see companies making mistakes, we see people not caring about privacy, is that it's just not there. That said, it's also not really at the forefront of people's minds, right? So I know that a few of the VC firms, I know that Coinbase, I know a few others do some custom mixing stuff to obfuscate where their funds go to reduce the speculation on where the money and the venture capital goes. That also said, chain analysis is getting more and more advanced every day. And just like moving the same pile of money and splitting it up, like it's going to prevent me from like clicking through Etherscan and figuring out where the money goes, but it's not going to prevent, especially some of the more advanced players in the space, from just like clicking a single button and like being like, all of these addresses are owned by the same person. So I think probably one of the, like in terms of mixers specifically, yeah, like ZK Snarks on Ethereum, that is where it's going to be probably for Ethereum. Limiting factors right now are gas price, gas costs, and just being able to sort of do it and trust it, because even like early days of Monero, there was like, everyone thought that things were private and then like, oops, they weren't private and you can't, like it's on chain so you can't go back, right? This is definitely like a pretty new thing. Like the immutability is really cool, but like it's also, if you put the data on it, and then it turns out it's not private, like yeah. We'll get there though. And I'll say, what is it, Tornado Cash, Roman's project? It's on Ethereum. That's the one I'm pretty bullish on, mostly because they just hacked themselves, but the privacy wasn't lost. And this is what I'll say, right? I have more faith in projects that have found big vulns, just because it means that like someone's been looking, because I think that probably every project out there has them. Yeah, that's my take. I don't know if anyone should please disagree with me.
Any question? What do you guys think will break DeFi? Besides like if MakerDAO collapsed, like what will break DeFi?
I've got a perspective. I don't think it'll, maybe not break, but I see tension brewing between DeFi and regulators, in particular in the US. So it was somewhat controversial. We added KYC to IDEX this summer. We announced our intentions to do so like late last year. We did that because we believe it's a requirement for our business to survive in the long term. A lot of the DeFi interest, I think one thing it needs to do to grow is to grow beyond this niche, which is right now people who are in crypto who want to go long on Ether or speculate on crypto and want to, I believe, don't want to use a centralized platform for some reason, largely KYC driven. So I think you see now regulators posturing. There was a quote from the director of FinCEN. It was basically, I don't care if you're a stablecoin, centralized, decentralized, we need you to comply. Someone says, well, what if we can't comply? He said, don't give me that. You might not want to, but you can. And if you can't figure out a way to comply, don't come to market. So that's, like, his message is loud and clear. I think then now the question becomes, okay, there's some things that actually are really hard in practice to go after. Uniswap's a great example. Like, they made the contracts, someone else deploys them, and I don't know if they run their front end, but basically you could go to them and say, hey, stop doing anything, and they could say, okay, we'll stop developing and it's going to live on, right? So that's a great example of something that is at this point essentially immutable and immune to regulators, but not the team behind it, right? So we can stop them from upgrading it. I think the real question will be like, what if they have a token model incorporated into that, right? So we can stop developing, but now our token's accruing value based on this thing that's already been deployed and is continuing to work. So that's where I think there's going to be some tension and potential friction in the future.
What if DeFi's evolved on GitHub with people that's named after Harry Potter characters? What happens then?
I think that's an underappreciated aspect of Bitcoin, right? The fact that it was developed anonymously, the coins haven't moved. I think that's a hugely underappreciated element of Bitcoin, because you know that Satoshi, she, the group would have been in front of Congress well before Mark Zuckerberg if they knew who it was, right? I think that, in our opinion, is one of the ways you can do it, but then you're limited to fully on-chain. And it gets into constitutional law, right? Like, you can write code in a book. You can then publish that. That's free speech. You can publish it on GitHub, but if you commit it and deploy it to the Ethereum blockchain, that's the line. It's really fun to kind of get philosophical about and not clear answers. So.
I thought the D in DeFi was supposed to mean that, but I guess it's not D enough.
So when you guys are sourcing advisors, whether it's legal or otherwise, to figure out these privacy questions, how to comply with regulatory as well as more philosophically, I think most of you guys are founders. What kind of strategies do you guys have to do that?
I mean, you have to look for the rare breed that is both an entrepreneur and a lawyer or whatever it is. And there are very few of these people in the world, I think. I mean, I've found very few. Where the entrepreneur is someone who decides, okay, we're going to get there. I don't know how yet. And we're going to persist in uncertainty for a long period of time, all the while convincing ourselves we will get there, right? And then the lawyer is someone who understands all of the constraints, or at least knows enough to learn about all the constraints. And we're very lucky to have found one of those people. If we hadn't, it would be much harder to run the project. But they do exist, and you have to find one of those people.
Good answer.
With or without privacy, who do you think the next group of users of DeFi will be?
I certainly hope it's mainstream users. I think, if that message wasn't clear, I think that I really hope that these high interest rates and these great services and the data protection that we see, and the moving of assets across borders and the international lending and the prospect to invest in assets that you wouldn't normally have access to, the access to stable banking. I mean, these are amazing services, not just for the unbanked, but for everyone in the world. Like, there's some huge problems with the global financial system. One I mentioned earlier, like if you're an immigrant with a high credit score in, let's say, Canada, and you move like 200 miles to the United States, you have to start over with a credit builder credit card because the credit bureaus will not port that information across an artificial border for no reason. And then there's all sorts of really weird millions and millions of people can't even get credit scores because they don't have a government-issued document. Something like 3.5 billion people in the world, like half, do not have a government-issued document. So they couldn't open up a bank account even if they wanted one, no matter how hard they tried. And so I think DeFi has already solved these problems for these people. Like, through local Bitcoins, you could give cash and get Bitcoin, and then through Bitcoin, you could get DAI. Like, they actually are solutions for these. But the problem is they're so obfuscated behind crypto crypto language and crypto wallets that we haven't built any interface for mainstream users. So in my opinion, I hope the next group of people to adopt the DeFi is regular mainstream users. Good question.
What else? Do you have a give it a chance to come back. Or you get a shot. You can take a shot.
Just for blockchain, we are talking about private data that go to sidechain, so not anymore the main chain for what we need. But the problem is that how do we make sure that the sidechain still exists? Because usually sidechains are run like by one company or group of companies, so it may disappear. So if I get my assets that are stored in sidechain for privacy focus, I may lose them because the company can cut them. So we lost the advantage of the blockchain a bit in a way.
If the sidechain is properly implemented, you can exit, right? Or you're talking about privacy sidechain?
Yeah, because I put in private sidechain my data, my assets, and if the company that owns the sidechain shut down it, I kind of lose everything. It's not like the blockchain, like nobody can stop it like Bitcoin on Ethereum. It's the sidechain are more like you lose a bit the advantage of the blockchain. So for me, it's how do we keep the remnants of the data and making sure that the data will be present in the next 10 years.
The sidechain has to be trusted, then there's trust, then you need reputation, right?
Yeah.
If not, then the sidechains, most of the sidechains out there, you can trustlessly use it. You trust them to your own trust. That's a paradigm for sidechains mostly. I don't know who uses a sidechain.
I mean, the original sidechains were the databases of all the exchanges, essentially, right? And so it's like we all have chosen to deposit assets on many different exchanges. Everyone shouts, don't keep your crypto on an exchange, and then everyone does that. So it's like, so I'm just saying, I do that. So, I think that, it's the same question as, well, what if an exchange shuts down, right? So if it's a big reputable entity like Coinbase, you'll probably be like, yeah, it'll probably be fine. And if it's some weird thing you can't pronounce the name of, you'd be like, probably should, not keep your assets on that sidechain for too long.
Any other question?
So privacy is a fairly new concept in the history of humanity. It's only since maybe the 1890s or so that it's been something that's been sort of the forefront. And it's something that now we almost take for granted. Privacy is such a fundamental concept. But then we've been in an industry where so far the only real hardcore things that we've seen are where privacy tends to be things that we think of as negative. Before there's always been a possibility of a hijack malware, but now we're really seeing it quickly because now someone can do it anonymously and get paid to relieve something like that. We've had suddenly we've got the two nations that the U.S. does not deal with because of human rights violations are now very heavily moving into technologies like crypto. There's a lot of, so far most of the, at least in the mainstream persona, and maybe it's true, maybe it's debatable, but a lot of the real actual advancement that's been made has been negative as far as crypto's concerned. At what point do we see all of the positive benefits that we keep talking about and promising each other? What is the missing linchpin for that to come about?
Yeah, so just to make this like a little bit more clear, I'm just going to talk specifically about like mixers, right? But this applies to like basically everything private, the same sort of concepts, but then it gets really abstract when I say it. So we're just going to talk about mixers. Okay, so the reason you have a mixer, right, is that you don't want like someone who looks at the chain to know that this address that isn't tied to an identity interacts with like the same vendor or different vendors or whatever, right? You don't want all these things to be linked, or your like real identity, in-person government identity, or your online person or whatever is linked to an address and you want to disconnect it from the next address, right? Those are the sort of the two general primary like technical use cases of a mixer, okay? The actual sort of like reasons though, right? Like the philosophical reasons behind this is that like you don't want your team members to know how much you get paid, or you don't want a government to know every transaction and every vendor that you buy from and every friend that you have and every person that you interact with. You see this in Hong Kong right now. You have people like really trying to use cash all the time because if they don't, they're screwed, right? The issue is that, and we see the same thing in sort of online communities, right? So if you look at Gab is like a terrible place that no one should ever go to, right? But Gab was created to be like a haven of free speech. Anything goes, right? But when you create a system, a community, a product, whatever it is, that only has that use case, right? Its only value is we won't delete anything you post here. The people that you initially attract are going to be people who can't post elsewhere, which happen to be like really the deepest assholes on the internet. And then you have a community with a few of those people, and then they attract more of those people, and on and on and on. And we actually see the same thing in mixers today with Bitcoin. Someone on the dark web spins up a mixer, and then all the other people on the dark web use mixer, and then the FBI shuts it down, right? This happens like all the time, like it's just a circle. So what do we need in order to like break that cycle, right? Like why is Reddit, right, which is also sort of a haven of free speech, they do have limits, way more limits than like say Gab does, but why is Reddit productive at all, right? The reason is that people are legitimately using it, right? Like they want to use it for good, and they do use it for good, and they use it for legitimate reasons. We see this all the time across like pretty much everything, but what we're not seeing it is with mixers right now. So I think that what will happen in order to get privacy to just be a thing that isn't this deep dark secret on the darknet is it has to be easy, it has to be built in, it has to be low cost, it has to compete with a normal transaction site, and there has to be more legitimate use case than illegitimate, right? So there has to be me not wanting my team members to know how much I make. Like there has to be more me than the dude buying drugs or selling child porn or buying nukes or whatever. And if we get to that point, then we're golden, right? Because then these things exist for real reasons. They protect like individuals in really, really terrible countries. They protect people's privacy in all the good ways. And again, we will have to be okay with the bad things that come along with that. Just like that's the internet as well, right? Like it empowers everyone to communicate like just seamlessly with each other, but like, there's places like Gab that hate thrives, right? And I think that we'll get there. And I'll just say like, Amin actually said we should just stop calling mixers mixers and call them like Secret Santa and see if like that happens. And that is sort of like, I don't know, it's kind of genius because yeah, like that's a legitimate use case, right? You want to like Secret Santa someone and use a mixer.
Yeah, so I think, so I have been working in security and privacy for over 2 decades, and one thing we continue to see, which is sad, is that even though here we talk about privacy, but when you talk to, just general users, still they continue to value convenience over privacy. There has been a lot of research and a lot of experiments done in this, on this topic. I think the issue here is that, like Taylor mentioned earlier too, so for privacy, I think we don't want it just to protect people's, whatever their private secret or something. I think more importantly, we want privacy to be an enabler, to be an enabling technology, to really address problems that couldn't be solved before and enable new capabilities that couldn't be accomplished before. So for example, that's why at Oasis, so besides DeFi, we also work in the area, for example, we call data sovereignty, where we help users maintain control of their data and their rights to data, and at the same time to enable data to be utilized in a privacy-preserving way. So today, for example, we continue to see, for example, data silo problems where valuable data is being locked up and not being utilized because of the lack of security and privacy protection. And in this case, you really couldn't use the data, you couldn't solve these problems without privacy technologies. And hence, privacy in this case is a key enabling technology. And similarly for individuals, I really do hope that in the future, we don't just talk about privacy as, again, a way for protecting individuals, whatever their secret is, but more so to actually as a way to enable users to gain, to have more benefits. So for example, at the beginning of time, there's no notion of property rights. It's only relatively recent, in the last maybe 400 years or something, there has started to have this establishment of property rights. So someone actually owns this piece of land and so on. And once that the property rights gets established, and also there's a way to enforce it, then we see that new business model started and really it propelled economy to the new levels. And the hope is that here when we talk about privacy, again, actually I think a more important concept is this right to data. So that by each individual, we establish rights to users' data, and then user has ownership to their data, and they can decide how the data can be utilized, and they can actually give benefits. Either it's through monetary benefits or other types of benefits. I think this will really change the paradigm. Now, with the user being the owner of the data, they can then really, again, take control and gain benefits. And I think when that happens, it will really change the story.
All right, with that, let's thank the panelists for their insights and perspectives. And
thanks a lot, everyone, for being here, and thanks, Teck, for monitoring the panel. And also, I wanted to thank the Oasis team members here for putting together the panel. Everyone has done a great work. Thanks a lot, everyone. Thanks again for being here.